How's it going, guys? Welcome back to the channel. My name is Ishaan, and in today's video we're going to be covering good old NIO stock. This is one we've been talking about for the last few days, and we've been really accurate in predicting its short-term price movement, as you'll see in a little bit. And so today we're going to be discussing its full technical analysis, its price target, and my exact strategy as to how I plan to profit off the stock. And along with that, the major news as to why the stock is actually even falling. So with that being said, let's get to it. Alright, so jumping into the technicals of NIO stock on this hourly chart, we can see a few things right off the bat. So first of all, a few days ago, the stock was forming this descending triangle. And I told you guys how the stock had broken below the descending triangle and had turned it into resistance, which was really bearish. And I told you guys clearly that the stock is now headed for a pretty big drop lower. Well, the stock ended up dropping all the way down to 34.6, which was the exact level I told you guys to watch for on a move lower. So honestly, congrats if you've been profiting off these videos, because we've been really accurate. So now taking a look at what's been happening recently, we can see that the stock pushed up and we failed to break this about $39 level. In fact, a couple days ago, I told you guys that the stock needed to break $39 in order for me to personally buy in. And then we can see the stock ended up dropping, and now we're retesting this about 34.7 level where we bottomed over here, and we had previous support in this area over here as well. So now it's absolutely crucial that we hold this 34.7 level. But as we can see, the red MACD line has crossed below the green signal line, and this is signaling that the momentum is shifting in favor of the bears again. Along with that, we can see how the stock is now again broken below the 9 EMA, which is this blue line. Essentially, when a stock is above the 9 EMA, it signals that the trend direction is in favor of bulls. When it's below the 9 EMA, it signals that the trend direction is in favor of bears. Just like how it's been doing over here. It's been pushing up and turning it into resistance, and we haven't really turned it into support and bounced from it. So that is also not a very bullish indicator. And look, I'm not trying to be bearish here, guys. Remember, I'm just trying to break down the technicals how I see it, because you have to remember, even I'm a shareholder of NIO. I have multiple shares, so I'm not deliberately trying to be bearish. I'm just breaking it how I see it. And along with that, we can see on the daily chart how we formed a massive bearish engulfing candle. I mean, look at that. This candle essentially wiped out all the gains of yesterday, and this is called a bearish engulfing candle, and further just shows that bears have now yet again taken control. And again, even on the daily chart, we can see how the red MACD line has crossed below the green signal line, and this shows that the longer term momentum has shifted in favor of the bears. Now overall, now that you're understanding the technicals, let me break down my price target and my personal strategies to profit off the stock. So first of all, this stock it must hold this 34.7 level. If it breaks below it, I could easily see the stock heading all the way down here to about this 32 level where we bottomed right over here, and below 32, then I could see the stock heading all the way down right here to about 29.2, where we had resistance in this area right over here. So that's the most likely area where we'll then find support below $32. So that's a pretty big drop if we do not hold this crucial $34 level. Now if we can bounce from 34, which is obviously the best scenario for bulls, then there are a few things that need to happen before I even consider buying. So first of all, we need to break above the 9 EMA and then start forming higher highs and higher lows. Like right over here, we broke above the 9 EMA, which is the blue line, but we didn't follow through. We didn't start forming higher highs and higher lows, because higher highs and higher lows are a crucial indicator that the momentum and the trend is shifting in favor of buyers. So I need the stock to break above the 9 EMA. And again, I will not be buying until we can break above this $39 level. Even last video, guys, I told you guys how important it was that we break 39. We didn't get that break. We didn't get a strong break. And guess what happened? The stock ended up dropping as I predicted. So that's why until we can break above this 9 EMA and we can break above this $39 level, I will not be buying. And the first level I could see the stock head to from there is easily this about 41 level where we had support in this area. We can see we had support here, support here, support here. So this is going to be the first level of resistance. And if you can break above 41, then I can definitely see the stock probably return up to these highs of 45.5, where we had resistance in this general area up over here. So those are the key levels to watch, guys, and the key technical indicators to be watching out for. And remember, if you want to be learning all of this, be sure to check out the Gen Z Trader Academy down below, where my goal is to help you learn all these different technical indicators and patterns so that you can become more profitable and make better entry and exit decisions. So be sure to check it out down below. Alright, so let's discuss why NIO stock has been dropping. So essentially, NIO stock has been dropping because they announced that they would be suspending production due to the chip shortage. They're the latest manufacturer to temporarily suspend production because of the global semiconductor chip shortage that has shut down plants and resulted in major losses for the sector. And even other top manufacturers in the automotive sector, such as Ford, Honda, GM, and Volkswagen, have all also been affected. And essentially, they said that they would halt production for 5 working days at its Hefei plant from next week and cut its first quarter delivery forecast by as much as 1,000 vehicles. They now expect to deliver 19,500 vehicles in the first quarter, down from a range of 20,000 to 20,500. And as I told you guys even last video, this chip shortage would be adding to the downwards pressure because, as we know, even from NIO's most recent earnings report, they clearly said that the chip shortage will hit its electric car production, and this was at the start of March. So this was a big red flag and a big tell that the company would continue to be struggling with this chip shortage. And the fact that now that Renaissance plant, essentially Renaissance controls about 35% of the automotive semiconductors, and basically the fact of the matter is that their plant, which caught on fire, caused a lot more supply concerns for these chip manufacturers. And now the fact of the matter is that NIO, who already said that their second quarter production capacity would be cut to 7,500 from 10,000, now they're going to be hurting even more because the fact of the matter is that a company, they do not suspend production and just end production just like that. They only do it if they don't have the supplies and if they don't have the chips. So right now NIO doesn't have the chips, and that's why they've suspended production, and this just really shows how hardly hit that they've been. And then you have to understand is that US trade tensions on the highly specialized semiconductor supply chain have also contributed to a backlog in chip manufacturing. And just from recent talks between Biden and President Xi of China, we can see that talks aren't really going that well. There's still a lot of constraint between the two sides, and neither sides are really, being that diplomatic as of now. So we can expect these tensions to continue, and if that does end up happening, it's going to add to the continuous downwards pressure for NIO stock. And look, I'm a long-term believer in NIO stock. I currently hold it as an investment position, and I plan to continue buying more into these dips. But the truth is that right now it's not a good time for the company, and we're going to have to see what happens next. We're going to have to see, can they secure chips from, let's say, other suppliers? What is their plan going to be? And what are the steps they're going to take to address this massive chip shortage? So it's just going to be really interesting to see, but I expect that maybe by the end of 2021, this chip shortage could definitely be resolved and we see NIO bounce back. But for now, you guys can definitely expect this to continue to add to the downwards pressure, especially if we see further delays in production going forward. So guys, be sure to like, subscribe, and check out the Gen Z Trader Academy down below if you want to learn technical analysis and learn about EMA crosses, MACD crosses, all of that good stuff so that you can become more profitable and make better entry and exit points. So be sure to check it out down below, and with that being said, I'll see you guys next time. Take it easy, clocking out for now. Peace.